So, good afternoon to all the participants, guest speakers from XIXL, Singapore, respected Director Mr. G. Srinivasan, Mr. Sivesh Sen, Cargo Committee Technical Member, IUMI, and dear colleagues from NIA. I welcome all of you for this special webinar on Marine DSU in collaboration with IUMI Germany. Let me extend my special thanks to all the speakers for consenting to come on board and share their experience and knowledge on this topic. I also wish to thank a special thanks to Mr. Sibesh Sen and our Director G. Srinivasan who supported for the initiation of this webinar. As you all know, DSU, that is Delay in Startup Cover, provides the safety net to ensure profits are protected and additional expenditure is covered. Heavy lift project cargo often consists of machinery or equipment that are critical components needed for the construction and subsequent operations of various industrial infrastructure projects. Despite the best planning to deliver the goods safely and within the project timelines, a simple unexpected or unavoidable event can severely interrupt these plans. Should these events cause physical loss or damage to the cargo or conveyance, significant consequent financial losses could ensue. In the event of such a loss, cargo insurance alone will not provide a remedy for the financial consequences of the project delay while the critical items are being replaced or repaired. DSU is another type of marine insurance that can be packaged with cargo insurance to mitigate this risk. DSU insurance provides coverage for the actual loss sustained to the insurance business generated at the project site. In order to understand the various aspects of marine DSU insurance, underwriting and risk mitigation, we have with us special guest speakers who are experts in their respective field. Moving ahead in this program, the flow of event for today will be inaugural address by Mr. G. Srinivasan, our Director at NIA, general overview of APSC marine market, also insight on Singapore market by Sandeep Khera, sessions on risk management and loss control by Captain Jarek and Captain Arijit. Project cargo underwriting and DSU by Marcus, as Luca is not available today. The last will be question answer session and closing remarks by Mr. Sibesh Sen. Before the inaugural address, a brief introduction about our director, Mr. G. Srinivasan. Sir joined this insurance academy as director in December 2018 after superannuating from New India Insurance Company, where he was serving as CMD for more than 6 full years. Prior to that, he was the CMD of South-based PSU, United India Insurance Company. He has more than 38 years of experience in general insurance industry, both in India and abroad, and is a very well-known name in Indian financial sector. He is also the longest-serving CMD of the public sector insurance companies. Through his leadership qualities, he has shaped a vision for academic success for all the participants who come on board and for the PGDM students in the academy. During the pandemic, he has created a climate hospitable to education and has cultivated leadership in others. With this brief introduction, I invite Mr. G. Srinivasan to deliver the inaugural address. Thank you, sir.
Thank you, Jayashree, for the introduction. Just checking, am I audible?
Yes, sir.
Okay. Dear friends, good afternoon to every one of you. I have great pleasure in welcoming the eminent speakers from Singapore, Sibesh Sen, and the participants to this webinar on Marine DSU Insurance. This is a program which is being brought by National Insurance Academy in collaboration with IUMI. As all of you would know, National Insurance Academy had entered into an MOU with IUMI a few months back with the objective of bringing expertise and knowledge on marine insurance to the Indian market. We had a webinar a couple of months ago as part of this collaboration. And today we are having the second webinar on a very important subject of marine DSU insurance. Just a couple of sentences. Organizations. National Insurance Academy, as all of you would know, is a preeminent institution in the field of insurance education, learning, training, and research. We have been serving the global market for the last 40 years Every year we train about 7,000 insurance professionals on various facets of insurance domain, technology, and other management subjects. We also provide leadership pipeline to the insurance industry by training young graduates who today occupy key positions in the insurance industry, both in India and abroad. We also bring out a lot of research papers which make a lot of sense to the industry and also to the policy makers like the government and also the regulator to bring in necessary changes in the insurance framework. IUMI, as all of you would know, is the International Union of Marine Insurance, is a body of marine underwriters, which brings all the marine underwriters to share their experience, disseminate knowledge. We are very happy that IUMI has joined hands with National Insurance Academy to bring this expertise to the Indian market in a much bigger way at this point of time. In this webinar, we have very experienced speakers from Singapore. Jeshi had just introduced very briefly about them. They will be talking about global marine market with special reference to Singapore, risk management and loss control, and also project cargo underwriting and DSU cover. Looking at the marine cargo, background in the Indian market, marine cargo, of course, compared to other lines of business, is relatively a smaller line of business in the general insurance space. But what is good is it has been reasonably a profitable line over the years. But we really see this portfolio becoming larger in the coming years. As all of you know, Indian economy is poised for a great growth in the coming years. Of course, this year has been a very difficult year because of the pandemic, where we expect the GDP to have a degrowth. But next year onwards, India would certainly be one of the fastest growing economies in the world. And the GDP of the country, which is currently about $2.8 trillion US, is expected to reach about $5 trillion US next 5 years' time. So the government is making phenomenal efforts to really shore up the economic growth in this country. So as the economy grows, clearly exports and imports are going to increase, and the potential for marine insurance is going to increase phenomenally. And with increasing insurance awareness, a lot of those who do not insure their marine cargo at this point of time would certainly be open to taking marine insurance in a bigger way. On the other side, India is also focusing in a big way on infrastructure growth. Especially the government has identified this as a major area of expansion for the country to really grow in a big way in the coming years. There are going to be a lot of projects. Even manufacturing sector is expected to show a lot of growth with the government's Atmanirbhar approach to increase the manufacturing base of the Indian market using many of the advantages of the Indian economy. So there's going to be a lot of projects happening in the Indian market in the coming years. So there's going to be a lot of need for project insurance, project cargo insurance, as well as DSU. As Jeshi was mentioning, DSU is today recognized as a very, very important line of insurance to protect the project owner. DSU is relatively new to the Indian market as compared to other lines, probably 20-25 years. Today we are seeing almost every project cargo goes for DSU insurance. But I wouldn't say that the expertise for writing this line of business is high in this market at this point of time. There's still a lot of dependence on the international underwriters, reinsurers to provide terms and conditions. So there is clearly, considering the kind of growth this line of business will have in the coming years, there is need for knowledge development. And I'm sure that this webinar, all the experienced speakers would bring in that kind of knowledge and expertise to the participants. I'm sure this program will be of great relevance and use to the participants. Wish the program all the success. I thank the speakers who have taken the trouble of sparing their time and going to address all of us. Thank you very much.
Yeah, thank you very much, sir, for the brief insight into the topic and also informing us about the IUMI and NIA. Now, before the actual session starts, I take the responsibility of introducing all the speakers for today. Let me start with Mr. Sandeep Khera. Sandeep Khera. Sandeep Khera is currently the head of Marine APSC for AXA XL Singapore, and he also holds the position of Marine Practice Leader Asia for AXA based in Singapore. He is also a member of IUMI Cargo Technical Committee since 2017. Prior to joining EXA, he has held various shipping operations, storage planning, commercial and general management positions spanning over 6 years with the niche container liner and project cargo shipping company. His sailing experience in merchant marine on commercial vessels trading worldwide spans over 13 years, and his last stint at sea was in command of VLCCs as a master. He has previously sailed on crude tankers, product tankers, and bulk carriers with renowned ship owners, gaining vast experience in handling various types of liquid, bulk, and soft commodities. Apart from his professional qualification and experience, he holds an MBA degree from the University of Chicago, both School of Business. I welcome you, Sandeep. Now I extend my welcome to Captain Jarek, AXA XL Marine Risk Consulting. If we talk about the industry experience, it exists over 16 years of seagoing experience, including 5 years in command as master. Served abroad general cargo ships, ro-ro ships, semi-containers, bulk carriers, multipurpose and heavy lift vessels. He has extensive experience with large project cargo, commodities, supply chain security, cold supply chain. Specializes in builders risk, hull and machinery, including blue and brown water technical and operational aspects of fleets. He worked for 7 years as cargo superintendent and owner's representative in Europe, South America, and Asia. He has over 8 years experience in marine insurance consulting with insurers based in Singapore with global network and exposure. If you talk about the industry affiliations, recognitions and designations, he holds an unlimited Master Mariner's Certificate, Master of Science, MSc Nautical Science and Marine Transportation, Postgraduate Diploma Business Management and Administration, Transported Asset Protection Association, that is TAPA in APAC region. Courses, he has done basic insurance concepts and principles, commercial general insurance, COMGI, marine cargo and hull insurance principles and practices, SCI from Singapore College of Insurance Limited. I welcome you, Jarek. Next, I would like to introduce Captain Arjit Paul Singh. If you talk about his industry experience, which is around 11 years of seagoing experience, with additional 5 years in managing oil tankers and including VLCCs. Served abroad oil tankers and containers vessel with global trading. He also was a marine warranty surveyor, that is MWS, for various types of offshore support vessel, oil platform construction projects, ocean towage, crane barge, topside lifting on behalf of oil major and international maritime contractors association, that is IMCA. Was involved in vessel valuation surveys, condition surveys, on and off hire surveys. He was also a part of P&I clubs, incident investigation, vessel collision, grounding, fire, cargo contamination. Job profile also includes ensuring new delivery oil tankers, including VLCCs, meeting oil major standards. He has over 7 years experience in marine insurance consulting with insurers based in Singapore with global network exposure. Presently, he is working with AXA XL as Marine Risk Consulting at Singapore. I welcome you, sir. Now it's time to introduce Mr. Marcus. He's a senior underwriter Marine Cargo, Deputy Project Cargo Trade Sector Manager in AXA XL Singapore. He is an experienced senior underwriter with a demonstrated history of working in the insurance industry and with AXA XL for past 8 years. Apart from his professional qualification, Marcus holds a Bachelor of Arts, honors focused in business and marketing from University of Portsmouth. I welcome you. And last, I definitely like to introduce Mr. Sibesh Sen, who is also a member of Cargo Technical Committee IUMI, who also helped us in arranging for this webinar. Sibesh Sen is presently working as EVP at HDFC Ergo General Insurance Company Limited in India as a head marine department, SME and product development since Feb 2017. Prior to that, he was with Tata AG for close to 15 years, heading their marine department and also taking charge of agency vertical. Of course, he started his career with National Insurance Company when he joined as a Directorate Officer in 1988 and worked with National Insurance Company for 12 full years in various capacities. If you talk about his education qualification, he has got a master's degree in history from Hindu College. With the introduction of the speakers, I now leave the platform to the speakers to carry ahead with this session. So first session will be from Mr. Sandeep Khera. I request you to please come on board and deliver your lecture. Over to you, Mr. Sandeep.
Thank you, Jayashree ma'am, for the kind introduction for myself and the team. Good morning, good afternoon, good evening to all the attendees who have joined us from not only India but also from different parts of the world for today's webinar. First of all, I would like to thank Mr. Srinivasan, National Insurance Academy, and Mr. Shibesh Jain for giving us this opportunity to share with fellow marine insurers our expertise in risk management and underwriting of project cargo and DSU insurance. And I hope all of you will find this webinar interesting. So I would like to commence this webinar by giving you a general overview of the global marine, the APAC marine and the Singapore marine insurance market. And I'll be sharing with you the market statistics for the year 2019. So allow me to put up my slides now. So first, I would like to start with sharing of the global and the Asia Pacific marine insurance market on the global stats. These figures are coming from the IUMI Global Marine Insurance Report 2020, which was published recently. And from this, I would like to touch base on a few important metrics. First, I would like to share with you that the 2019 global marine gross written premium was 28.7 billion, which was relatively stable compared to what it was in 2018. The second point I would like to highlight is that the Asia Pacific region continues to grow its market share, which in 2019 was 31.8% of the global market marine premium, which you can see on this side of the graph. The third point which I would like to highlight is the increasing market share. As you can see on this graph, this is an evolution of the APAC marine premium starting from 2012 till 2019, and you can see the progressive growth year on year, which has started from 2016 onwards. This graph clearly shows that the share of Europe marine insurance premium is decreasing, whereas Asia is gaining traction, like I mentioned, steadily since 2016. Next, I would like to draw your attention to the line of business share. So this graph also shows you the contribution of each product line. You can see the global marine hull premiums were 24.1% in 2019. Cargo represented 57.5. Marine liability represented 6.8 and offshore energy represented 11.7. So the global marine GWP for cargo, like I mentioned, was 57.5 and hull was 24.1. This is quite different from what we experience in the Asia Pacific market, where the share of cargo premium is relatively small compared to the hull premium, which is 34.8 for cargo and 41.6 for hull. And the main reason for hull having a higher weightage in Asia Pacific is because of top shipowning nations by fleet value, or the fleet insured value, are domiciled in Asia Pacific. These are namely Japan, which is ranked number 1, followed by China, ranked number 3, Singapore, ranked number 4, and South Korea, ranked number 6. Next, I would like to give you an overview of the Singapore marine insurance market, which is a major insurance and reinsurance hub in the Asia Pacific. And I would also like to touch on the market incurred loss ratio, which will give you an overview of the market profitability. To start with, in 2019, the Singapore marine gross written premium in the local market was about 1.8 billion Singapore dollars, which is roughly 1.4 billion US. And this represented 4.7% of the global marine GWP and 14.8% of the Asia Pacific marine GWP. If I break down this premium into respective product lines, cargo and hull, cargo represented about 500 million gross written premium, which is 3% of the global gross written premium of the market and 9% of the APAC cargo gross written premium. What I've shown on this slide, which I will come to later, is the local business. So SIF in Singapore is a local domiciled business, Singapore Insurance Fund, and OIF is the reinsurance inward business. So you can see consistently since 2014, the domestic business has been quite flat, whereas there's been inflow of reinsurance inward business, which is business being generated from overseas cedents, which is coming into the Singapore market, which, like I mentioned, I will touch on it a bit later. Hull and PNI gross written premium in the Singapore market represented around 871 million in 2019, which represents 12.5% of the global Hull GWP and 31% of the Asia Pacific Hull gross written premium. So this directly reflects that Singapore is the largest hull insurance market in the Asia Pacific region. And on the right side of the screen is what I've described as the hull premiums. Similar to cargo, you can see the domestic clients insured within Singapore, the premium has remained quite flat, ranging around 300 million Singapore dollars, whereas the reinsurance inward premium has been moving up, but quite a bit erratic. And like I mentioned, I will touch this again a bit later in my presentation. Like I mentioned on the previous slide, the line of business share in Singapore, you can see the cargo represents about 36% of the market premium, whereas hull represents 64% of the market premium. So Singapore is quite heavily skewed towards hull business in comparison to cargo. If you compare this with the global marine premium, which I showed on the previous slide, cargo represented 57.5, whereas hull was about 24.1% of the GWP. Now, I would like to give you a bit of detail on the evolution and the origin of the cargo premium, and then I'll move on to the hull. Like I mentioned, the cargo reinsurance inward business in Singapore has been growing steadily since 2016, which you can see here. So 2017 to 2018, the growth was around 28%. 2018 to 2019 was about 7%. This is representative of the fact that in 2017 and 18, there were large natural catastrophes in the US and other parts of the world, and the market in those countries hardened, and it was difficult to place business in the US and in the UK, and a lot of business did come into the Singapore market on the cargo side. In comparison to the reinsurance inward business, you can see the domestic cargo market has stayed quite flat. It's not grown significantly in comparison to the reinsurance inward business. Now, if I compare something similar on the hull side, you'll be able to see that the hull reinsurance inward business in Singapore has been quite erratic. There was a growth of about 17% in 2018 versus 2017, and then it did drop in 2019. One of the reasons I've marked this in red is the profitability, which I will come on to the next. This growth in the market did come with its own profitability challenges. And this I'll be able to show you in the next slide, which will cover the incurred loss ratio of the Singapore market. Let me start with the cargo first. So what I'm trying to depict here is the cargo reinsurance inward loss ratio. You can see this is the brown graph. On an average since 2014 to 2019, the average reinsurance inward incurred loss ratio in the market has been 60%. And the domestic cargo, which is the SIF business, you can see is quite profitable. It's running at 27% loss ratio. One of the reasons, like I mentioned, for this erratic performance is the peak which we got from the business which was coming in from the UK market and from the US market, where the Singapore market did write a lot of reinsurance inward business, but it did come with its own profitability challenges. And if you start adding up numbers as an underwriter, profitability being the most important aspect, and you put assumptions of putting 25% brokerage on this reinsurance inward business and adding expense ratio of 15% to the 60% loss ratio, you will note that the combined ratio of the business is close to 100, which does not leave any margin for errors in the market here. On the other side, like I mentioned, the domestic cargo market has been quite profitable and the acquisition cost is quite low, but it remains quite stagnant in terms of its growth. Now, I would like to show you the picture on the hull side, which unfortunately is not the same as in cargo. What I've plotted here are the incurred loss ratio for the hull business in Singapore from the years 2014 to 2019. And you will see the average incurred loss ratio for the reinsurance inward business and the domestic business has been quite similar at the range of around 70%, which is 10 points more higher than what I experienced on the cargo. And like I said, the profitability has been challenging in the hull market for Singapore. And if you add up exactly the metrics I mentioned previously, 20% brokerage, which is slightly lower compared to cargo, 15% expense ratio, the combined ratio of the business in the market is exceeding 100%. And this has been quite challenging. Like I mentioned, that there was a growth in the reinsurance inward market in 2018, which is reflective here on the loss ratio. But the moment this business started coming in, there were losses as well, which tailed this top line. One of the other major reasons for the market experiencing such high loss ratio was the biggest loss we experienced last year in the market was a T-bone collision of a specialized offshore vessel, which was a tanker. And this costed the market $125 million of a CTL loss. As you would know, the capacity in the Singapore market has been quite a lot in the recent past, and this loss was the trigger of a lot of market exits from our market, which I will cover in the next slide as we move. Next, I would like to give you an overview of the key players and in the Singapore market on both cargo and hull. And I would also like to give you what have been the notable market exits from our market, especially following the profitability challenges which I showed you in my previous slide. If I start with cargo, in 2019, the gross written premium in the Singapore market for cargo was $665 million. And the top 5 insurers in the cargo market in terms of their gross written premium and market share were as follows. So AXA was number 1 in cargo with a gross written premium of 38 million and a market share of 6%. MSIG was second in the market with a gross written premium of 26 million and 4% market share. Great American was number 3 in the market with 20 million premium and 3% market share. Tokyo Marine was 4th, 18 million and 2.8% market share. And Zurich was number 5 with 15 million and 2% market share. I have also put in the statistics of the Lloyd's Asia market. This is a cumulative gross written premium for all the syndicates which were writing cargo business in 2019, which represented a 13% market share. But I would like to put a footnote to this that this premium does include treaty and binder business, which is written on a fact basis where the underwriting is not controlled in Singapore in Lloyd's as such for each and every account. If I move on to the hull side of our market, which I mentioned was quite challenging last year, the gross written premium in 2019 was 1.16 billion Singapore dollars. Like I mentioned, Singapore hull market is the biggest hull market in APAC. The top 6 insurers in terms of gross written premium and market share were as follows. First Capital being number 1 with 91 million gross written premium, 8% market share. QB number 2 with 43 million gross written premium and 4% market share. India International at 43 million gross written premium and 4% market share, followed by Great American with 40 million gross written premium and 3% market share. AXA was 5 with 21 million gross written premium and 2% market share. Again, I've mentioned Lloyd's here, which had 169 million of gross written premium and 15% market share. Like I mentioned in terms of cargo, this also represents treaty, line slips, and binders business, which is written in Lloyd's Singapore market. And now I would like to come to the last section of my presentation to highlight the notable exits which have happened in the Singapore market over the past 1 year. So these are the companies which have recently exited the Singapore market, main reason being profitability and scale. The latest one was Argenta. Prior to that was MS Amlin, CNA Hardy, Brit, Swiss Re Corso, and Allianz. Allianz, let me remind you, it was mainly for hull, not for cargo. They continue to write cargo, and a lot of these markets, like I mentioned, were quite sizable capacity providers in the hull business in the Singapore market. With this, I've come to the end of my presentation. I would now like to hand over the helm to my colleagues, Captain Yarek and Captain Arjit, who will give you an overview about the importance of risk management and loss prevention for project cargoes and DSU insurance. Thank you.
Thank you, Sandeep, very much, and welcome everyone. Good morning, good afternoon, good evening, wherever you are. So now we go into a little bit more technical part of the presentation. Let me share the screen. So the way we're going to present, actually, I will be talking, let's say, for about 50% of the time, and I will hand over to my colleague, Captain Arjit, and he will cover another aspects of the marine warranty surveys. But let me go to the presentation first, please. This slide is only for information because we've been actually introduced already to the audience, and thank you very much. I believe that you might have a copy of this presentation later on, so you can always come back and review the profile. There is a certain reason why we're trying actually to highlight the experience, which will be later on actually connected to the expertise which is required from the marine warranty surveyors. So this is Captain Arjit. And what to remember also that not every company has a team of the marine risk consultants, as AXA have, and a couple of other companies. And the underwriters actually benefiting from the expertise which sits in the in-house. Historically, a majority of the marine warranty surveyors were actually external parties, so the underwriters needed to appoint them or paid actually as it goes for any advice or any comment to the specific risk. Having the team in-house, it allows underwriters to tap into the expertise actually instantaneously and ask for any advice or any technical comments to the specific of the transportation, logistic type of the risk, or even the location or some peculiarities which are specific to the transportations. So AXA XL has actually presence almost everywhere, as you see. So we have a pretty strong position in APAC with the 3 people. In Europe we have 6, and there is 1 person sitting in South America. There is a little bit information about what we offer. We're not going to talk about this specific. They are very important, of course, but due to the time factor, we need just to flash only generally what is the expertise and what there is consulting can offer. These slides present a little bit more in the details what is related to project cargo. But I think the most important probably is this slide, which shows actually the experience. So as you see from the chart, we've been leading, and just to give you a little bit context, those projects which you see on this map, they are the projects which we were leader. Means the leader, we were sitting on the underwriting lead and also on the risk management lead. In this sense, we were controlling or we risk managed the logistic processes on behalf of the underwriters and as well on behalf of the assured. This is very important because when we will be talking about marine warranties, we or marine warranty surveyors or risk consultant not only represent interests of underwriters, but also represent interests of the assured. But I will touch a little bit later on this one. Just probably the last comment to this slide is, please have a look on the type of the project. So probably you will find almost every type of the project, because the projects, of course, they are divided into infrastructure projects, to the power plants, to the expansion, to the development. So we were literally leading almost every type of the projects, and of course the size of the projects or the magnitude of the project was different, but some of them, they were very, very big. So now we go into the marine warranty surveys. I think this is very important to give you another context of the losses. So some times ago, there was a study done, and based on this study, it was indicated that 25% of the losses coming from the theft and pilferage, 40% of the losses, they are coming out from the handling and stowage, 15% actually are water damage. So if you look on the pie, these three types of the losses, they take about 80%, which means that the 80% of the losses are preventable, and 20% of the losses, they're resulting from the fortuitous events, which we don't have the humans, they don't have control. And this is, in fact, this is what the insurance is for. The insurance is for covering the fortuitous losses, and our job as a risk consultant is actually to make sure that the other type of the losses, which are very generically presented, they are mitigated. Why we need marine warranty surveyors? Of course, why we need? First of all, you have the provisions in the policy of the insurance, which reflects or actually lists the number of the marine warranty surveying companies which can be appointed in the course of the movement of the critical item. And the critical item, of course, that's another topic which Marcus will be talking, but the definition of the specific cargo which has an impact, either financial impact or especially financial impact whenever we're talking about the DSU, but also there is another context, of course, the time. Because on the top of the finances, you have obligation to your final, or actually EPC company has an obligation to the final customer to comply with the specific schedule of the project. So marine warranty survey is actually independent person who reviews technicalities, method statement, logistics, whether it complies with the industry standards or whether the equipment is used appropriate to the specific transportation, and also yes, I think that's probably the most important. This slide is very busy slide, but again, the purpose of this slide is actually to highlight pretty broad responsibilities of the marine warranty surveyor. So he's not only the guy who is sitting in the office and looking into the papers, is also the person who is actively involved in the operation. So the person goes on the field, goes to the port, goes to the project site whenever is required, and checking. So in the very short way, what we can say about the basic responsibilities is actually make sure that whatever was agreed on the paper, so whenever we review the method statement, which is one of the conditions for approving the critical item shipments, that those agreements or those provisions which were agreed in the method statement, they will be complied on the site. Yes, selection criteria for ships. Why I brought it? Because even though you have institute a classification clause in the policy, which literally, in the very simplistic way, set for the limitation of the age, but there are other parameters as well, which are behind any vessel or every vessel on every ship owners, which are not stipulated. So we usually will be looking also on the vessels which are appointed or which are used for a shipments of specific cargo. So there is a number of other parameters, not only the age, but for example, the port state control history of deficiencies. We do have the access to the specific database, which we can tap into and gather all of this information, including even the history of the technical managers, or whether there are any conditions of class imposed on the specific ship. The next slide is reflecting barge shipments. Why barge shipments? First of all, it's one of the most complicated shipments for a lot of technical reasons, but one of the major points is actually that the barge shipments, in the light of the policy, is usually considered as a critical shipment. So will always require the attendance of the marine warranty surveyors. And those two pictures shows just one of probably thousands of different examples of the cargo which is carried on the barges. And also barges are very frequently used in Asia, in India, in Indonesia, Malaysia. So this is one of the most common way of the transportation. And the last one is inland transit. Even though it looks probably pretty simple, I would say, once the cargo is on the trailers, but there is a lot of complexity behind. And one of the most important, before even talking about the complexity about the transportation, is actually route survey. So how the cargo will be transported from point A to B, but this will be talked about by Captain Ajit, so I'm just only flagging this one. Having said that, of course, another component before cargo, of course, the first we have the route survey, and on the second point, we need to make sure that the cargo is positioned on the trailer, which is designed to carry such a cargo. And again, we could probably speak another 15 minutes about the technicalities, but I give you just one example, that once you have this cargo on the trailer, each of the axle has a certain load. So exert the force on the ground, which, for example, equals 20 tons. So whenever the cargo is moving from point A to B on this trailer, each of the axle presses the ground with the 20 tons. So now if the cargo is crossing, for example, a bridge, which doesn't have the proper capacity, this bridge will collapse. So this is one of the elements of the complexity. Another things are center of gravity of the cargo. There were instances when such a cargo actually capsized or collapsed. So all of these elements are very important for marine warranty surveyor, which need to check and make sure that the cargo is safe to go. And that was everything from my side, and I'm handing over to Captain Ajit.
Hi, thanks, Eric. All right, let us now look into some of the key challenges and the value of MWS surveyors. There are numerous challenges faced by the surveyors, such as inappropriate conveyance, poor selection of lashings materials, and route surveys not done. Most of the projects carry out at challenging and remote locations, so having latest route survey information is critical. For example, we have a hydroelectric power project in Nepal, where the main contractor is from India. The EPC contractor original approach was only to carry out one route survey before the project starts, and the project is over a period of 3 years. But we have recommended a periodical route survey to the project. We do understand that Himalayan mountain is made of old rocks, and with heavy rain during the monsoon would make the landslide occurrences more often. Therefore, the MWS surveyor would require more recent route surveys before approving the transportation, and will need to look into the weather factor before approving the movement. The photo at the top right, it shows the actual situation of the route condition during the project period, where certain sections of the route are having landslides on the unpaved road, and we need to build bridges at the bypass roads and with the limited width of the road condition. Meanwhile, the second photo below there, it shows the consequences of not carrying out a route survey, whereby clearance of overhead bridge was not taken into account before dispatching the cargo. Okay, next slide, Derek. Very often, the transporters, they will misdeclare the cargo weight, and resulting the cargo weight exceeding the axle load on trailer, where my colleague Eric just explained what's the importance of the axle load on the trailer. The transporters also, they get underpowered trucks for the reason that the leasing of underpowered trucks is much more cheaper. And the securing of the cargo with inadequate lashings and condemned equipment. Selecting wrong trailers, like my colleague Eric mentioned, that for the stability, right? Example for cargo with high level of center of gravity, not transported on low bed trailers. The photo over here describes the consequences for not following the industry best practices, where the truck crashed and the cargo moved loose. The MWS surveyor would need to review the relevant information before approving the transportation. Okay, we go to next slide now. Okay, the previous slide, Eric, is that a video?
There was no video. There was no video.
Okay, in fact, there was a video over here, but somehow that it missed in this presentation. So what I wanted to inform, that a simple procedure of loading a heavy lift on the vessel. So what happened that during this process on the vessel, we need to ballast the tanks. Ballast, that means they need to get the seawater into the vessel tanks. This will bring down the center of gravity of the vessel. When they carry out the heavy load, the center of gravity of the vessel, it will move towards a higher position. But in technical terms, if it moves higher than what been calculated, it would result the vessel to capsize. So this is what happened where the vessel equipment is not in sound condition, or the stability vessel miscalculated. Right, we go to the next slide. Okay, so this is a real photo. All right, it was a project, power plant project in the Philippines. So the top left photo showing over here loading of the shipment from the mother vessel to the LCT barge, the top right. Okay, and I think the LCT barge, it was loaded with a value of about $7 million of the cargo. Subsequently, the second top right photo, it is showing the sea fastening of the shipment. And the below photo, it shows the vessel bridge, where the vessel bridge is the navigation control, and it should have unobstructed navigation view as per IMO visibility requirement. Just imagine when you are driving a car, your windscreen is 80% painted. How would you able to drive? So this is the similar situation. So we did not approve the voyage as they are breaching the international regulation. However, the contractor argued that they have the port clearance for the domestic requirement. And I have to tell them, that if the Marine Department is aware, it would result the vessel being detained for endangering the life of people on board the vessel and also the cargo on board. Thus, the cargo would not be able to be delivered in timely manner to the project site. Okay, Eric, we go to the next slide. Let us see if we get a video over here. Okay, there's again another video missing over here. Okay, so wanted to highlight that the loading of critical equipment with the lifting point below the cargo, it could be really challenging and it can be tricky. And if there's no plan been reviewed by the naval architect or with a qualified person, they might be loading in a dangerous manner, and we have seen that the cargo tipping off. Unfortunately, that I can't show you all this particular video over here. It is missing over here. All right, so this particular slide is showing on the typical notification period for moving the critical items. We would prefer to be given 7 days notice or minimum 3 days notice before any movement of critical items. And during the COVID period, we required at least 20 days notice. All right, before I end my presentation, let us ask ourselves, what is the value of risk management services? I would say that it's a multi-million dollars. Why? Because each of the recommendations provided by the attending surveyors or by us, it prevented a highly potential incident on the critical items for the project cargoes. So with that, I end my presentation and would hand over to Marcus. Thank you.
Thank you, Ajit. Yes, I do agree that risk management is million-dollar business because it's important is to ensure the safety of the cargo, and thus the DSU. Okay, before I start, let me share my slide. Guys, I will be speaking about the underwriting aspect of a project cargo with DSU cover. So I will focus on 5 agenda: introduction, marine cargo DSU insurance, precedent conditions and additional information. The fourth one is an insurance policy and further approach with regards to DSU. First, the introduction. You know, project financing has changed considerably in recent years. Because of the mega project, we need a lot of financing. That's why banks are required. And they require DSU cover to be arranged. And principals often repay their loan with future earnings of the project. So for example, a power plant, they need to make sure that they can be operational in times in order to pay the loan that they have taken up. It is utmost important that the revenue are generated as anticipated. So the project must be completed in time. Therefore, project schedule have become tighter in order to start production ASAP. And that's why contracts between the bank and the insured are very stringent with regards to project completion, and no delay can be allowed, because any delay will cause a lot of losses in the profit. Okay, so we go to the Gist of the Marine Cargo DSU Insurance. What can be insured? Okay, first, indemnify the financial consequences caused by delay in completion of the project due to an insured loss under Cargo Section 1. So the delay must be due to a loss under Section 1, the physical loss of the cargo. So it cannot be covering any other delay due to any other kind, like port blockage or whatever, without any physical loss. What could be the insured interest? There can be loss of gross profit, increased cost of working, standing charges, and other costs as agreed. Who can be insured? It should be the insured himself, the principal owner, as well as the bank, because they finance the project. Okay, indemnity period. For DSU insurance, there must be an indemnity period for a set period of time. It is defined as the period during which the use of the insured property is impaired by a delayed commencement of the operation due to a recoverable cargo loss or damage. Insured period begins on the date the plant would have started operating if the loss or damage had not occurred. Insured period is limited by an agreed maximum time. So it could be in the form of, normally it's about 12 months, 18 months, or up to 24 months. Insured indemnity. Insured indemnity is the sum insured, which represent the expected insured interest. Example, the gross profit, turnover for the maximum indemnity period. Okay, there are special checkups, special things that we need to take note of when covering marine cargo DSU insurance. We need to make sure that the time schedule are realistic. Time schedule, first one, time schedule refers to the shipping schedule. We need to make sure that the cargo arrive on time. Secondly, there must be a sufficient time buffer. Example, for critical items, those big items, we need to make sure that they not only they arrive according to the time schedule, they have to be at least maybe about, let's say, 12 months ahead of the before they put into operation. You know, this is called lead time, because in case any damage, we can ask for replacement of the part in time so that it will not impact the project, the progress of the project. Sufficient time retention. Actually, in other words, it could be time deductible. So we do not want the insured to come to us for any delay that maybe 1 or 2 days they ask for damages. No, we don't want that. They need to have a sufficient time retention on their own. For one is proven technology versus venture. Proven technology could be like the normal power plant. Venture could be some power plant of alternative, or could be any other project which is using technology which is too adventurous, which is new. So this can be something we need to take note of during underwriting. Next one is a possibility of alternative measure for critical items. This is like if this particular critical item were to be damaged during the transit, is there a chance that you can get this alternative critical item from neighboring country or from the local country where the project site is? Finally, is a possibility of repair on site versus return transport to manufacturer. This is quite similar to the previous one. It's just that, is there a possibility that this damaged critical item can be repaired on site? If so, it can also save a lot. If not, if we were to return to transport to manufacturer, it will incur more. premium. Okay, premium for DSU normally is calculated on the insured and indemnity, which is the sum insured. Decisive factors are transportation schedule, yeah, because it impacts the shipping schedule. It's leeway for the delay. Indemnity period is like I said earlier, 12 months or 24 months. Time retention, this is the time deductible. So the premium rate could be, let's say, for example, it could be higher if the time deductible is very low. Let's say their time deductible is only 15 days, for example. So we really need to have a higher premium rate because, you know, the chances of the claim coming up is higher. Precedent condition. Precedent condition actually means is more pertaining to the survey warranty. Before we can accept the risk, there must be a survey warranty, which mentioned by Yarik and Aziz. So especially like, for example, loading and discharging survey of the critical items. And after survey, we also need to make sure that there's a full compliance with the surveyor recommendations. And the carrying vessel clause example for vessel carrying critical items, it must be of a class vessel and not too old. This is an example of a heavy lift of a critical item. Additional information for underwriting. Okay, these are the additional information we need to take note of when underwriting project cargo. Description of the project, bar chart, project schedule, breakdown of the value for each critical item so that you can identify which are the items to be surveyed, list of items and suppliers, where is it coming from? Is it coming from Europe or other part of the world, which may need longer journey, expertise and experience of subcontractors, who is the EPC contractor, supplier, blah, blah, blah. Transportation schedule, road survey, how is the survey condition to go to the project site from the discharge port, time schedule, progress report and monitoring, specific information of country of destination. Could it be like the accessibility of their infrastructure and all that. Okay, DSU general principle 1. How do we properly assess a DSU rate? In order to properly determine a DSU rate, we need to take into many factors. So these are the factors that we will need to take in when we try to come up with a premium rate. For example, the number 1 is the number of critical items. You can read the retail, I will just tell you the headline. Number 2, the lead time for each critical items. How long it takes for you to replace one item. Some can be very fast, 6 months, but some can be as long as 24 months. Number 3 is the level of technology used for the critical item. Like I mentioned earlier, this could be a new venture, which is very hard to get a part. You can only get this particular part from a particular country because of the new technology. Or it could be a proven one, which is easily available. You can get it from, anywhere. Transport lead period. This is how long the replacement time needed. Of course, you should also take into consideration of the testing and commissioning of the particular critical item. Number 5, the share of critical items, they are on the critical path. I will share with you what is critical path later on. 6, the number of units and potential interchangeability of critical item between units. Let's say you have 2 power plants to be built. So, 2 units of power plants to be built in one project site. So chances are they may be shipping 2 identical parts coming, maybe in different schedule. So because they are identical units, so they are interchangeable. So if one item were to damage the first shipment, they can depend on the second shipment to deliver on time to replace it. So reducing the risk of DSU delay. of course, number 7 is the fact that the critical items must be shipped separately. What if the 2 units of power plant, they were to ship together? So if the damage to the vessel, it will cause damage to both units. So it defeats the purpose of the interchangeability of this critical item. Okay, another DSU general principle. This is what is critical path that I mentioned earlier. I try to make it simple. The critical path is shown here. Okay. On the Gantt chart, you can see from here. It says the longest sequence of activity in the project plan, which must be completed on time for the project to complete on due date. For example, if you have a critical item were to arrive, let's say in December, now by end of December, okay. If it wasn't arrived on time, the next stage of the project cannot progress further. They cannot proceed further because they depend on the particular unit to come in. So if this particular critical item is on the critical path, it will affect the progress of the project. So that's why we need to find out through our, which I will touch later on, identify critical item, find out what is the shipping time, what is the lead time, and calculate what is the DSU exposure in order to find out how many critical items are on the critical path. I will zoom in on just to give you an idea of our pricing tool. From this table, you can see that on the left-hand side, critical items, these are the critical items. Oh, sorry. So I have put a value here for each critical items. This is a 2-unit power plant, just to give you an idea. Then I put in the gross weight, like dimension, lead time, arrival date. The most important part is this new arrival date on site, which I've highlighted here. Why? This is actually a calculation I make based on the arrival date and the lead time. Why? This arrival date was given to me. We know that this first critical item, gas turbine, were to arrive on the 15th of July, 15 December 2022. So we know that the lead time is 19 months. So we add it up, we get a new arrival date. So it should be, we expect the worst case scenario, it were to be damaged when it arrives. So we need to order again. So it will take another 19 months. So when it arrives, there's a new arrival date if it comes 15 July 24. So this 15 July 24, has it exceeded the commercial operation date of the project? Yes, because the project supposed to be started on 1st of May. So you can see that there's a DSU exposure here. So this one highlighted in red, in orange actually. So this is a DSU exposure. When it's green, it's nothing, no DSU exposure. So this just to give you an idea how we calculate the DSU exposure. And in this, our in-house pricing tool, we actually calculated a premium rate highlighted in purple here. This is based on the exposure that we have calculated. Okay. Of course, other things we need to take notes are the wordings of the DSU insurance. This is just to give you an idea. For example, standard exclusion from number 1 to number 7. These are the exclusion that we normally will insist to put in there, because it's a project cargo. They should have this standard exclusion, like excluding rust, oxidation, in respect of unprotected steelwork. We do not expect the insured to ask us to cover rust, oxidation for an unprotected cargo, right? So these are the standard exclusion we'll put in there. Some conditions to note here from 1 to 10 here. For example, delay in opening, we mention this condition is not applying to critical items. Why? Critical items should be opened immediately. We do not want this to have, like, they delay for like 6 months later, they find out this damage there. No, this is not acceptable. This is only for the general cargo. Another thing is like errors and omissions, same thing, not applicable to critical items. Unpacking clause, claim preparation clause, these are the things we like to be deleted. Why should we pay for claim preparation costs? Cover for AICOW, additional increased cost of working. This is not within our EBITDA. We only cover for ICOW. And something to note of is a critical item separation clause must be in there to make sure that if there were 2 units of power plant, you do not want to shift all the critical items together. In view of current COVID-19 situation, Ajit has mentioned before on the notification for survey, it might be delayed. 7 days is not enough. Now these days we need up to 20 days, probably due to the fact that the surveyor need to be quarantined or whatever. So we do introduce some wording for that in response to the COVID-19 situation, just to give you an idea. This is the wording that we will be using. Special edition condition for survey warranty. This is to be inserted into the survey warranty. Namely, something like, named surveyor must be informed 20 days prior to the start of the loading, storage, or discharge operation. Also, that in the event surveyor not able to attend or prevented from attending the required survey, due to this situation, they can probably do a virtual kind of teleconference, but it has to be subject to written approval from our risk manager. Yeah. I think with that, I end my presentation. Okay, thank you.
So thank you, Marcus. I think all the speakers deliberated upon each of the topics that they were given. A lot of people have been writing questions on the side, but I'll take some of those. And first of all, before I forget, thanks to each one of the speakers, Sandeep, for telling us all about the Singapore and the APAC market. Marcus, about the underwriting. I think we'll all love the exclusions that you really pointed out, Marcus. I'm sure some of us those miss, and the broker wording sometimes prevail. And I think Arjit and Jarek told us how important the marine warranty surveys are. So quick questions, a few ones, because there are lots of questions and the time is short. I think we should maintain time as much as we can. Sandeep, first round of question to you. In the APAC region, which are the countries which are admitted? Because a lot of these Indian companies, they expect us to do insurances out of here. So if you could just give us a quick heads up on which are the countries where we should be arranging for local papers.
Yeah, Shivesh. So very few are very valid topic. Very few are non-admitted. One of them being Hong Kong, like I discussed with you, but majority of them like Indonesia, Singapore, majority of the big markets, Taiwan, they all need admitted covers. I can probably send you a list of APAC countries later to circulate amongst the audience on which countries do we do unadmitted cover. Even Vietnam is one of them. Majority of them are admitted covers.
Yeah, so I think that's really important for us because a lot of these Indian companies have their companies over there, and people expect us to take the insurances. Before I take on some more, I think the last one of the points that Marcus brought out, but more important to the risk manager engineers, is on the remote surveys. So how useful are these? Because I remember in the initial phase of the COVID, we had a situation where a large, almost a dredger was to have been taken on board a ship and carried to another port, and the surveyors could not travel. And we initially tried to sell a ICC cover, and they said the surveyor would do a remote survey, and as luck would have it, the chain broke and the dredger fell into the sea. So how good are these remote surveys, or these when the surveyor himself can't be physically present? Maybe Arjit or Yarek could.
I think Ajit has some experience recently, right? But it's not really more like project cargo. It's more for general cargo, the virtual survey. Project cargo, we have yet to see anything, right?
No, we did actually, Marco. So
You did. Oh, okay.
So let me take this. So we had a very similar situation actually, and this was pretty complex transportation of the 3 tugs from Trinidad Tobago to China. But it required actually to move those tugs from Suriname to Trinidad. And there was no way we could mobilize surveyor in Suriname. We could mobilize surveyor in Trinidad for a float on, and of course float off, but there was no way. So not dragging on this question, everything would depends on the complexity. In this case, so the one of the parameters was actually that surveyor needed to issue the towage approval, and there was a lot of correspondence and sending the photo. So making the long story short, this is possible, but should be actually considered case by case. There is no like cast it on the stone that all the remote survey could be approved. Everything would depends on the complexity and technicality of the specific survey.
Sandeep, although you've answered this question, this was among the first questions asked. Can a DSU policy be issued on a standalone basis where cargo is imported on CIF terms and the overseas leg is insured by the supplier? So you have a very funny situation where you're not the cargo insurer and you're being asked to insure the DSU.
Yes, Shibesh. So, like I mentioned in the chat as well, we are seeing a lot of these inquiries coming in. Marcus can also explain on this. So, 2 key things. What are important for us is to have the claims control as a DSU underwriter, where the Section 1 insurer would have no interest in repairing the item quite fast because it's not time critical for him, whereas for us it triggers a DSU claim. So we've been successfully putting a suitable claims cooperation or a full claims control clause that in the event the DSU exposure goes up to what we've underwritten. So we put it in the policy that how many days of DSU are we factoring in our pricing. In the event it's triggered, then we take over control. That's quite important for us, and maybe Marcus can also give an example of his experience on this, but that's something to watch out for.
But how do you manage the warranty survey in such a situation where you're not the cargo? It's a bit of a...
Correct. So that's where we have we need visibility. We've been putting in wordings where the project owner is supposed to share with us warranty surveys, or have a level of minimum requirements which Yarek or Arjit would put, identify those critical items and say we need this to be done. So that's a part of our coverage that we need to enforce, that we need to have visibility on those, because like I mentioned that we are the severity insurer on the project and we need to have control in the event something goes wrong. Yarek, do you want to mention something on this? I think we saw a few projects in Australia like this.
Yes, I mean, in the terms of the critical items, I think, I mean, of course, the topic is very broad, but one of the points is actually that on the kickoff meeting, which we haven't mentioned actually during the conversation, on the kickoff meeting, actually, there are a couple of the parameters we can agree upon how you define the critical item. So the critical item doesn't need to fall in the specific definition, but can be agreed actually during kickoff meeting, because there are certain requirements for a cargo. So I'm not sure whether this is the comment, Sandeep, which you expected.
I think Marcus, you might be able to help. There are a couple of questions which are coming. How do you define the retention period or the excess? How do you come to what sort of is the rightful retention that as an underwriter you should keep? What are the yardsticks for you to keep that sort of a retention?
Okay, normally this is a time deductible, I would say. There's no like fast and hard rule for that, but the market practice is it should be minimum 30 days.
Okay.
But I have seen some project which with DSU exposure like more than 1 day, 2 days for a few items, we insist that the deductible need to be 90 days as well. There could be some cases that we know that the DSU exposure is going to be high. We want to reduce the DSU exposure. That's why we increase the time retention by increasing the deductible. There's no hard and fast rule for that. But the standard normally is a minimum 30 days. It could be 45 days, which we are seeing in the market.
A couple of questions on claims. I don't know who to pose to, but whoever among the specialists can answer. One, I think, is from Ruchi, possibly she's from Tata AG. She has a question. She says the cargo is damaged, the critical cargo is damaged, which is also followed by possibly a NatCat situation in that area, and accessibility becomes a problem. Will this also, this delay due to the event happening over there, also be added to the time period or the delay startup?
Maybe I can take this. Is there a physical damage to the cargo? If there's a physical damage to the cargo, then resulting in delay, yeah, it's covered. I would say it's covered.
Howsoever cost, that means that delay could be the area surrounding is inaccessible, and so reaching that site gets even more delayed. So it should be allowed. Correct, na, Marcus?
Yes, because it's a result of the physical damage to the cargo already. Unless the delay is not caused by this, the direct cost must be due to the section 1, the physical damage to the cargo.
Thanks. I think I'll take one or two. There's one which talks about, I think Sandeep's already answered about one of those MQRL, and it says in one DSU project, one of the reinsurer has accepted the risk, follow line reinsurer with NQRL, no known or reported loss. Binding instructions with the lead slip was sent on 15th being Friday, and the reinsurer signed up on 18th with NQRL, and on 16th the loss is reported. Please clarify the plea of the reinsurer. The claim was turned down, it seems, because the slip was signed on the 18th. Sandeep, you have...
Yes, Shivesh. So at least I cannot comment on other companies, but for our company, if we do get a reinsurance requirement, we do confirm our line is bound on an email awaiting for the signed slips, and that's considered as we are on risk.
So I think that's a very positive way of looking at it, and I think I'm sure major players would be taking it in similar lines. Once you have confirmed it, whether you sign the slip later or not is a secondary issue. I think that's a way to approach the thing. There could be some more questions, but I think it's time. I think we should maintain that 1.5 hours that we had agreed. I take first and foremost, I thank each of the speakers, Sandeep, Yarek, Arijit, Marcus, for sparing their time. All the presentations were of absolutely top quality, and I take this opportunity of thanking both NIA, which is leading in the Indian marketplace in the education, in spreading the rightful things to do, and then they've also associated themselves with IUMI. I'm really happy that IUMI had also readily agreed to participate, and and I'm sure the director of IUMI Education, Henrike Kohl, has also joined in as one of the participants. She said she would. That shows that how much IUMI and NIA are working closely together. And I also thank the director, Mr. Srinivasan. I think you need a vision to create an organization like NIA and also collaborate with IUMI and try and make it bigger. As part of IUMI, between me, Sanjeev, Ravi, who are currently members, I'm sure more members will also join in. It shall be our endeavor to make sure this partnership grows. Whatever relationships we have within the organization at IUMI, we should bring in the best of specialists and throw it open to the market over here. And I'm sure we're going through a very tough time in the Indian market, but as they say, tough times don't last, tough guys last. It's only a matter of time when things improve, and I'm sure knowledge is the only weapon that we carry. And I think marine is the most fascinating of all business lines, and there's so much to talk about, there's so much to learn. So thank you everyone, to each of the participants who've taken time to join this webinar. And of course, Jayashree for taking all the effort from the IT part, from the mailers, to making sure we do the mock drills, for IT illiterates like us to make sure we also connect it rightfully. So the last word to Jayashree or to Sir, if they wish to say. Thank you very much. And we hope to, we'll try and share some of the presentations also, except the one on loss control, which is slightly large. The other ones, if the speakers are okay, we can share it with the participants as well. Sir, would you like to close, or Jayashree, if you wish to add anything? I'm happy that this.
No, I'm thankful to every one of you. It's been a great webinar. A lot of things we could learn. I was there throughout the program. A lot of inputs on the subject. Thanks to everyone for taking the trouble and spreading the knowledge to us. I thank Sibesh also for taking the initiative of organizing this. Thank Jayashree for doing everything to make this program happen. And I would like to thank all the participants for the nice questions you posed. And I would like to tell them that we will have many such programs in future. Thank you very much, and all the best to every one of you.
Thank you. Thank you very much, sir. Thank you very much to all the participants.